Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's automotive technology deals. This is Steve Greenfield from Automotive Ventures, and thanks for joining us. I hope everyone has been enjoying the Automotive Ventures March Madness contest on LinkedIn, where you got to vote for which automotive technology company is most likely to achieve a $1 billion plus exit someday. 64 companies began, but only one could win. Your votes got them there. We had many very close contests throughout, but this last match really took the cake. This last contest truly was a match of equals, 7 days, and the lead went back and forth numerous times. The winner had trailed until the last 12 hours of the contest and then pulled ahead, just barely beating their opponent by just 4 votes. It literally came down to the wire. Our winner this year is digital retailing provider CarNow, beating out connected car player Spireon by just 4 votes in the final seconds of the contest. CarNow tallied 782 votes to Spireon's 778 votes. It was amazing to see 2 opponents who were so well matched in this final contest. And with that, I want to welcome to the show Tim Cox, the face of CarNow. Tim, it's great to have you here.
It's great to be here, Steve. Great to be here.
Well, congratulations on the win. Tell us a little bit about CarNow.
Well, CarNow, we started our company in December of 2014 with 0 dealers, other than my Lexus dealership that I was working at here in beautiful Atlanta, Georgia, and off we went. So we started out with a very strong foundation of chat and communication, and then everything we've built, digital retailing, automated workflows, is undergirded with the strong foundation of conversation. Because we always tell people, and when you think about it, no matter the tech, you can't really you can't sell a car without a conversation, at least one.
It's true, very true. It's very wise. So let's dig into the contest. You faced some pretty fierce competition throughout this whole contest. We'll be showing the bracket here on screen. But when it came down to the end, it was you guys versus Spireon, and I was amazed. I mean, we made that a seven-day contest. Up until literally the last 30 minutes, it was going back and forth in terms of the lead. How do you feel about it? And sort of what was your strategy really to take the win on this?
Well, I don't think there was any strategy. I think, and first of all, a lot of good things have come for this. As a matter of fact, we've already reached out to the CEO at Spireon has reached out, and there's just a lot of great people, a lot of great companies in our space, and this was more of a team building thing. It was great to see all the companies, their how they pulled together, and yay team. I mean, it sounds cheesy, but that's what it was, and it warms the heart when you see your we call them not employees or team members, but our CarNow family members saying, hey, I was at this place, the culture here, and all of that, and that's what we took from this, and it was a lot of fun. It was a lot of fun. There's probably a lot more out of those 64 companies, a lot more deserving than us, but it was a great experience, and our team had a lot of fun.
Cool. It was great to hear that everybody rallied together. Well, you're far too humble. You guys have a great company, and obviously a huge following on social media. So congratulations, and we'll look forward to seeing you again soon. But I guess congratulations to all of your family members as well out there, and all of your customers as well. So congrats, and thanks for making time for us today, Tim.
All right, brother. Thank you so much, Steve.
All right. Have a great day.
Yes, sir. You too. Bye-bye.
I want to thank all of you for your incredible engagement throughout the bracket, and I appreciate each and every one of the 64 participating companies, and we look forward to seeing you at next year's contest. Enough about March Madness. Let's dive into this week's technology deals. We've seen a lot of investment into electrical vehicles over the past few months. Now we're starting to see more big investments into the autonomous vehicle, or AV, space. This week, self-driving automaker Cruise, backed by General Motors, raised $2.7 billion in its latest funding round with investment from Walmart, taking the startup's valuation to over $30 billion. The investment will help support Walmart's push to create a home delivery logistics network that's fast, low cost, and scalable. The 2 companies began working together in November through a delivery pilot program in Arizona. For years, Walmart has dived in and out of partnerships with last-mile logistics providers like Uber, Lyft, and DoorDash, and it's also created an internal network called Spark to do the same. Cruise's new valuation of more than $30 billion is up from $19 billion when T. Rowe Price invested in the company back in 2019. Just as Microsoft gave Cruise, a major software player, in its corner, Walmart gives it a retail partner with thousands of stores and deep pockets. This news comes just a week after Too Simple Holdings, which is developing autonomous trucks, now on the road in Texas and Arizona, raised $1.35 billion through an initial public offering, valuing the self-driving truck startup at nearly $8.5 billion. In further autonomous vehicle news, Ocado Group, the UK online grocer that has been making strides reselling its technology to other grocery companies to help them build and run their own online ordering and delivery operations, is making a £10 million or $13.8 million investment in Oxbotica, a UK startup that develops autonomous driving systems. Ocado is treating this as a strategic investment to develop AI-powered, self-driving systems that will work across its operations from vehicles within and around its packing warehouses through to the last-mile vehicles that deliver grocery orders to people's homes. It says it expects the first products to come out of this deal, most likely in closed environments like warehouses rather than the less structured prospect of open streets, to be online in 2 years. In other international news, French startup BlaBlaCar has raised a new $115 million funding round. While the company is better known for its long-distance carpooling marketplace, BlaBlaCar has also added a bus marketplace with the acquisition of WeBus and an online bus ticketing platform with the acquisition of Bus4. Existing investor VNV Global led the round. Two new investors are also participating, Otiva and FMZ Ventures. In battery technology news, General Motors is joining the list of big automakers picking their horses to win the race to develop better batteries for electric vehicles with its lead of a $139 million investment into the lithium metal battery developer SES. Volkswagen has QuantumScape, Ford has invested in Solid Power Group, along with Hyundai Motor Company and BMW Group, and now with SES's big backing from General Motors, most of the big American and European automakers have placed their bets on their battery technology. Data analytics and driver management systems developer Idelic has completed a $20 million fundraising round to help continue development of its transportation safety products. The Pittsburgh-based company's flagship Safety Suite product integrates data from multiple technology sources into a single system of record and uses machine learning to turn fleet data into predictive insights to help fleets manage their safety performance. Highland Capital Partners led the funding round with participation from AXA Venture Partners. Previous investors that also participated in the round include Birchmer Ventures, Origin Ventures, TDF Ventures, and SAS Venture Partners. So on to our companies to watch. Every week we highlight interesting companies in the automotive technology space to keep an eye on. If you read my monthly industry intel report, I showcase a few companies each month, and we take the opportunity here on the Friday 5 to share some of those companies each week with you. Today, our company to watch is DealerX, founded in 2013 and located in Key Biscayne, Florida. DealerX is the premium provider of marketing, data, and analytics for the automotive vertical, serving thousands of dealers across all brands, regional ad groups, and OEMs. DealerX has helped automotive retailers save tens of millions of dollars by avoiding fraud and eliminating wasteful ad spend while dramatically reducing cost per sale. How many vehicles could your dealership sell if a product or service could identify the buyers in your local market? Capturing who they are, along with their browsing and location behavior, right down to the vehicles of interest across any device, their PCs, their tablets, and their mobile devices. DealerX then enables dealers to engage each in-market shopper on their mobile, home, and work devices. Dealers can engage with buyers before they've ever visited your dealership website. DealerX collects over 20 billion data points, data that is then refined and mapped to the DealerX profile graph every day. DealerX offers real-time notifications when your customers start shopping, both online and offline. So that's your weekly Friday 5, a quick wrap-up of the big deals in automotive technology over the past week. It's an exciting time to be in the automotive space with a ton of deals going on. Make sure you stay tuned in each week to stay up to date on the auto industry's technology M&A activity. I'll keep my fingers on the pulse of deals being done so I can share updates each week with you. If you're an early stage automotive technology entrepreneur looking to raise money, or an entrepreneur who wants to chat about the best timing and process to sell your company to achieve the best outcome, I'd love to discuss with you. Thank you for tuning into the CBT News for this week's Friday 5, and we'll see you next week.
Thanks for joining us for another edition of the Friday 5.